These USD lenders do a heavy promotion among Indian students, and they try to show that the unsecured loan, which costs about 11 to 12% in India, they are giving it only at about 8 to 9%. Is it actually cheaper? When you're comparing two loans in two different currencies, the key concept to understand here is interest rate parity. IMF clearly states in its report that the dollar rate will be about 81.5 rupees in next 1 year, and the same dollar will be about 94.4 rupees in next 6 years, considering India's GDP position. Hello all, this is Damini, co-founder of VMake Scholars. I welcome you to the 34th episode of our web series Loanflix Season 2. So today's video is only for the students who are looking to study in the US. So we have discussed this topic multiple times, that whether a USD loan, which always looks cheaper than an INR loan, is it actually cheaper? See, these USD lenders do a heavy promotion among Indian students, and they try to show that the unsecured loan, which costs about 11 to 12% in India, they are giving it only at about 8 to 9%. So I know it sounds very lucrative, to be honest, until you know the whole picture. And the point to ponder here is that if these guys are so cheap and they do not even require a collateral, they do not require a co-applicant, then why is every Indian student who is qualified for their loan, which is going to 200 or 250 universities, which these lenders fund, why is not every Indian student taking loan through them? They do not even reject the loans generally. But still, only 5% of or less than that Indian students have taken loan through these USD lenders. This is because the remaining 95% have done their research properly and they are qualified for loans in India. As I mentioned earlier as well, that we have already made a couple of videos on this topic. For example, in season 1, I made this episode 10, wherein in part A and part B, I discussed all the aspects of comparison between a US dollar loan and an INR loan. So I discussed about, processing fee difference and the income tax benefits which you can get if you're taking loan from an Indian lender, which you will not get if you're taking loan from a USD lender. Similarly, the government subsidies I spoke about, and the most important part, which was interest rate parity based on the currency fluctuations. So I'll also be talking about those points briefly in this video, but I will not get into that much detail. So that's why it is advised that you watch that episode 10 part A and part B of season 1. The link to the same is given above. And in season 2 also, I made the first video on the same topic, wherein I told you about the USD INR calculator which we have created so that students like you can calculate the difference it makes if you're taking a USD loan versus an INR loan in the exact money value. So you can check out that video as well, and the unique calculator link to both of those are given in the description. Now you must be wondering, if I've already made 2 videos on this topic, what is new for today? Right? So on my last 2 videos, many people commented that I had been too pessimistic about the USD INR rate, and I had been predicting USD rate at a much higher level. See, I could be wrong because when I recorded those videos about 2.5 years ago, I predicted the USD rate as per all the reports and statistics available to me at that point in time. But I want to tell you today that the IMF, which is International Monetary Fund's recent report. So they publish this report twice in a year. So even the last report and the one which came in April this year, in both of those reports, they have predicted a USD rate which is very closer to what we had been mentioning in our videos. So I will also take you through some of those key points in that IMF report further down in this video. Before that, I want you to know one thing, that VMake Scholars is an organization which is funded and supported by the Ministry of IT, Government of India, and our sole purpose is to help students like you get an abroad education loan. So we make these videos so that you are empowered, so that you can take the right decision. Once you have done your research properly and you have taken the decision, we can help you with the entire process of the loan, right from application, documentation, sanction, negotiations, disbursement, everything. And all our services are completely free of cost. So to get in touch with our team, you can request a call back using the link mentioned above. So when you're comparing 2 loans in 2 different currencies, the key concept to understand here is interest rate parity. So interest rate parity is an equation between the interest rates and the currency exchange rates. So if you Google it, it can get too technical to understand. So here is an explanation in layman terms. Let's say you are taking a loan in an appreciating currency. So in our example, it is USD, which is always increasing compared to INR. So the interest amount in this appreciating currency will always be higher than the interest amount in an INR loan, which is a depreciating currency, even if both the loans are offered at same interest rate. So let's take a simple example. Let's say you're borrowing $100,000 from a USD lender. So currently its value is about 78 lakh rupees because today dollar is about 78 rupees. And let's say the interest rate is 8%. So after 1 year, what you have to pay? 108,000. I'm taking only 1 year for example. Okay. But what you need to understand is after 1 year, the dollar will not be 78 rupees. Let's say it became 81 rupees by the time. So this 108,000 value will be about 87.5 lakhs at that point in time. Now let's say instead of taking a USD loan, you decided to take an INR loan at the same point in time. So you took 78 lakh rupees from an Indian lender. The rate of interest, let's say, is about 11%. Okay. The final repayable after 1 year will become 86.6 lakhs. Now could you see that? Even though the interest rate was 3% cheaper, the final repayable just after 1 year is also 1 lakh higher. Why? Just because the currency went up by about 3 rupees. So you need to understand that what we are looking at here is that about a period of 8 years, 5 to 6 years you require to repay and 2 years is your study period. So in this 8 years, the dollar will keep going up and up year by year. And as the dollar goes up, the value of your principal amount, if you have taken loan in India, will become cheaper and cheaper compared to your US dollar earnings. Now, some of you might argue that the dollar is not going to become 81 rupees in next 1 year. Guys, you are wrong. IMF clearly states in its report that the dollar rate will be about 81.5 rupees in next 1 year. And the same dollar will be about 94.4 rupees in next 6 years, considering India's GDP position. And I'm not lying. All the facts are given in the report and the link to the report is given in the description. So now you will be able to get the benefit of this ever decreasing value of Indian currency with respect to USD if you're taking a loan in INR. And the economist says very simply, if you're comparing an INR loan with a USD loan, so the basic method to check out which one is better is that simply subtract 5% from your INR loan. So for example, if you're getting an Indian currency loan at about 11%, minus 5, which is 6%. So if your US dollar loan is cheaper than 6%, then go for US dollar loan. But if it is higher than 6%, the offer you are getting, then your Indian loan might be better. Yeah, so this is the basic thumb rule to calculate which one is better, keeping in mind that all the other factors like processing fee, etc. are the same. So now let me take you quickly in 2 minutes through the part that what are the other factors you have to keep in mind when you're comparing two loans. So first of all, processing fee. So if you're taking loan from an Indian government bank, the processing fee will be 0 or 10,000 rupees. If you're taking loan from an Indian private bank or NBFC, the processing fee is going to be 0.75 to 1%. But at the same time, if you're taking loan from an international lender like Prodigy Finance, the processing fee is about 4%. You may not realize that the processing fee is so high because they add the processing fee amount directly to the loan amount itself. The second benefit, if you're taking loan from an Indian lender, is income tax section 80E tax exemption, which you will not get if you're taking loan through a USD lender. For that, you have to take loan through an Indian financial institution. You can calculate the tax benefit. It is generally about 2 to 3% is what your absolute interest rate reduces. With this tax benefit, you can calculate it by using a tax exemption calculator. The link to the same is given in the description. And the third thing is government subsidies. So Indian government has a lot of subsidies through which it waives off your interest of the moratorium period. Again, you will not be qualified for these subsidies if you're taking loan from a USD lender, because for that, again, you have to take loan from an Indian financial institution. So there is a video I have made on government subsidies. The link to the same is given in the description. Of course, there are some factors which are in favor of a USD loan. For example, if you're taking a USD loan, you will not have forex charges and remittance charges. Plus, you will not have any TCS, which is tax collection at source for foreign remittance, because in this case, you're not getting any foreign remittance if you're taking a USD loan. But see, even if I weigh the extra processing charges which are taken by the USD lenders versus the forex charges and the TCS which incurs on INR loan, the processing fee side will still be heavier. Right? So that's what I'm saying. Forget about all these factors. Just compare one thing. If your USD loan is more than 5% cheaper compared to your INR loan, go for the USD loan. Otherwise, go for your Indian lender loan. Because see, the INR loan also now you get on similar terms, without collateral, without co-applicant. So you need not worry about the eligibility factor here. So beware of one more thing which I recently came across when I was doing my research, that some of the USD lenders like banks and NBFCs are not charging interest on a reducing principal basis. So what happens in India and even around the world, when we keep paying EMIs every month, our principal amount also keeps becoming lesser and lesser. So our interest is only charged on the leftover principal amount for the subsequent years. But when a bank is charging loan interest on non-reducing basis, so what happens is, for example, if I took $100,000 on a non-reducing principal basis interest, so what will happen if I'm taking 8 years to repay that loan? Even in the 8th year, I will have to pay the interest on $100,000 only. So there were some USD lenders who are charging 3 to 4%, but the principle of calculation this interest was this. So that is actually very huge. So please be aware of this. You should not go for such kind of lenders who are not charging interest on reducing principal basis. Now, with all this information, some of you might be convinced to go with an INR loan, and some may ask in the comments that what if I've already taken a loan for my visa purpose or for my I-20 from a USD lender. Guys, there is no restriction. Even if you have taken loan from one lender for your I-20, you can change the proof of fund when it comes to visa. And even if you have taken one proof and used it for I-20 and visa, you can still change it when it comes to the actual usage. There is no such restriction on that. So what we can do is you can apply to us, VMX Scholars, using the link which is given in the video description. You can request a call back and we'll help you with the entire process. We'll try to get you the best interest rate as low as possible in the market in the least processing time as possible. And as you know, all our services are completely free of cost. So do request a call back and we'll put you in touch with a financial officer. That's it for this video. If you have any questions on this jargonsful video, then please put it in the comments below and I will definitely answer all your questions. And please wait, do not close this video. There are two more important points. The first one is, as I mentioned, we have this USD INR calculator which can help you calculate the difference. Please check out that calculator. The link is in the video description. And the second important point is that please subscribe kar lo yaar. See, we are taking so much risk by making these eye-opener videos about USD lenders. They might kill us for that, right? So what is the point of taking this much risk if we don't get one subscribe and one like also? So please subscribe and please like. See you in my next video.
Don't forget to subscribe and click on the bell icon to never miss any updates from us.